Okay, well, that's the technical aspect. Let's get a quick fundamental view as well. Matt Orton is U.S. Market Strategist and Chief Market Strategist at Raymond James Investment. Matt, of course, has liked India for a long time, and I think he's overweight the market. Matt, good to have you with us here. You may like it, but most foreigners are still staying away because they may like it, but they are staying away and not putting the money in, and they're complaining about valuations. Fair enough. I'll get to that in just a bit, but very near term, do you think all this stimulus out of China, and we had a guest yesterday on the program in India who was saying that maybe over the next few days he would watch how flows are beginning to shape up to determine what near to medium term looks like, whether it will excite foreigners, because the Chinese market's trading at about 8 to 10 times. We're trading at about 22 times. Just your thoughts.
Yeah, good morning, Prashant. Great to see you. And China is certainly an interesting one. The market has taken off over the past couple of trading days. But when I look at what actually has happened, what the PBOC has laid out, in my opinion, it's incremental, it's insufficient, and honestly, medium to longer term, it's going to be ineffective. It's the same exact thing that we've seen before. We saw it a little bit earlier this year. We saw the same types of policies last year. It's not actually addressing the fundamental economic challenges that the Chinese economy faces, which is a consumer that saves more than they spend, and there's dampened consumer sentiment as well, given the equity market. So I think this is a move to juice the equity markets and maybe try and get institutions to take a little bit more leverage. It's working in the short term. What I'm advising to clients is if you want to get exposure to this, it's a trade. Perhaps rent the trade, rent the upside through maybe call options. But what I do longer term is this is a move I would be fading. And even though there's such a big valuation discrepancy, like you pointed out, China is incredibly cheap, but it's cheap for a reason. It's not to say there isn't value in China. There certainly are a number of companies that are very interesting. But from a longer term perspective, the growth story in India is so much more compelling. There's a much more friendly regulatory environment. The economic growth is there, and it might be more expensive, but it's justified because of the earnings and economic growth that's behind it. So I would say stick with India, stick where there's real growth, not growth that might be a facade for bigger problems.
Oh, we love the sound of that, Matt. It's music to our ears. Basically, what you're saying is China is a trade and maybe India is the bigger investment that you could focus on. Got it. But, just to play devil's advocate and to make the case that the other side is making, some worry that we are maybe in the late stage of this bull market cycle or maybe even the earnings cycle. I was speaking to a domestic fund manager here who was saying when they talk to corporates, the worry is that the first quarter you could ignore because we had domestic elections and maybe business activity slows down a bit. But, I think now we're moving to the litmus test in terms of business growth, earnings, and whether the market can sustain at these levels. What's your reading?
Yeah, it's a really good point, Surabhi, that you bring up. And I think what you've been seeing, especially over the summer, with a number of the high-flying companies that started to either pull back or flatline a little bit, what's interesting is it seems to be almost a rotation towards higher quality, maybe garpier type companies. It's not so much a rotation out of India or worries about India broadly speaking. I think it's just changes that are taking place beneath the surface. And when you look at what has really taken off over the past couple of weeks as the broader indices have rallied to new highs, a big part of it are companies that have actually justified those earnings. So some of the names that I favored in the financial space, we've talked before about ICICI, but that's a high quality compounder that's delivering 15, 17% ROE on a very stable basis, growing loan deposits, and it's offsetting perhaps some of the net interest margin worries of the potential for lower rates by increasing deposits in its large wealth management business. So that's a high quality business that's taken off, and you're seeing a number of companies like that where the rallies are more justified, and those where you might have more questionable fundamentals that may have rallied just because of infrastructure plans, because of enthusiasm after you got some of the election digestion through the system of the market. You've seen those names more flatline. So I am encouraged. The main message, though, to clients, Surabhi, is don't chase this market higher. Let there be pullbacks like we saw a month or so ago, and let that sort of downward trend for higher quality companies be a good entry point.
All right. Hi, Matt. Morning and good to see you. What about the IPO market here in India? That's very, very vibrant. Some worry that when the IPO rush gets too fast, too furious, then it's a cause of concern. But it could also tell you the kind of enthusiasm you have towards India. I'm talking about the Hyundai IPO, the Swiggy IPO. What's your view?
It's encouraging because you're seeing IPOs in India and we're not really seeing them in the US. I think it speaks to regulatory environment. I think it speaks to innovation and the opportunity set longer term, and the enthusiasm for public companies as opposed to private. So it highlights the distinct nature of both of the markets and why having exposure to a growth market like India is a very good complement to a portfolio that has US exposure. I still like the US. It's still significant overweight in my portfolios, but this IPO market, I think, worries me less because it's backed by a lot of enthusiasm, strong technicals across the rest of the market. And again, a lot of these IPOs are leaning into stronger fundamental themes, burgeoning domestic demand for vehicles, companies that have presence in the EV space that's continuing to grow. So I actually think it's a signal of strength longer term. The IPOs specifically, may be interesting, maybe not, depending on where it actually prices out. You tend to see these names fall a little bit after the initial trading actually starts, but I think it's a good, healthy sign of a vibrant market.
Okay, all right. So that's a thumbs up even to the IPO market. Matt, really good listening into you today. I'll tell you what, because we sitting here sometimes question what's going on, and it's healthy questioning, right? That's our job. But you tell us, since you're completely sort of sold on India and you believe in the story here, apart from names like ICICI Bank, what else are you looking at? What else would you want to own in this market?
So, Surabhi, a good example of a name that's kind of, moved downward a little bit, going through a consolidatory period, is Adani Ports and Special Economic Zones. It plays into the overall theme of longer-term Indian growth, but it's a name. It's the biggest port operator in the country. You're getting about 15% revenue and EBITDA growth, which I think is very, very encouraging. And you're continuing to see investment not only in India, but also in other emerging markets. So there's a lot of different levers this company can pull, and it's not really constrained in its ability to finance its operations. So that, I think, is an opportunity where valuations have come in a little bit, and it might be an interesting opportunity for investors to get some exposure if they don't have any, and a different way to perhaps play the infrastructure growth of India type of theme.
Matt, lovely speaking with you. Thank you very much. And Surabhi, I think that was a good point, right? I mean, that sometimes sitting here,
yeah, we question what's going on. We wonder if it's too good to be true, but good to get your external perspective.
Someone who's investing in other markets as well, and then, the view on India. So I think it kind of stands out, and so good to get that, Matt. Great to have you with us here. Appreciate it. Well, I think